Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia. Clearly, if you see in terms of markets, the somber trade continues. However, we've managed to regain levels of 18,700 in trade today, but we are almost near the day's lowest levels as we speak. In terms of Bank Nifty as well, above the 43,700 mark, with gains of around 2/10 of a percent coming in there. A lot of stock specific action is what we are seeing. Bharti Airtel, the top gainer in today's session, followed by Apollo Hospitals, HDFC Life, BPCL, Tata Steel. Whereas pressure building in terms of pharma names like Cipla as well as Sun Pharma, IndusInd Bank trading under pressure. UPL is down and about as well as a Titan, which is under pressure. In fact, let's get in Devarsh Vakil from HDFC Securities to discuss with us in terms of which are the movers and shakers in trade today and what investors should be doing with them. Devash, good morning and welcome to the show.
Good morning. Pleasure to be here.
Devash, my first question coming to you is let's pick up the auto pack. You have a Bajaj Auto that has been in focus in today's session, and that's one reason being that Triumph is being launched. Overall, how are you looking at a Bajaj Auto? Because clearly there is troubled waters in terms of our export markets like Nigeria go. Domestic is something that they are focusing on as well right now.
Right. So the Bajaj Auto clearly was quite undervalued, and we had expected that this move can come in. Management had indicated that the retail demand from the Indian market was good. Export demand was also bottomed out. But from there, last couple of months, we have seen that the domestic motorcycle industries have started showing some weakness. Management had guided about 6 to 8% kind of a volume growth, which has already played out now. Now, the valuation have almost 17, 18 times FY25 uh, earnings. It appears quite expensive to us. And given the uncertainty about the monsoon, and as you mentioned, the uncertainty creeping in on the export front, we think that the stock is little overvalued at this level, and we have initiated a call with a reduced rating, and we expect stocks to slide down. And once it corrects a little bit, then we can again review it. But it doesn't make, from the valuation point of view, it doesn't make sense to remain invested. It is trading around 45, 4600 levels. We expect it to slide down to around 4000 level, and that time we'll again look at it and review it. So my advice is to wait it out and let price correct before getting into Bajaj Auto.
Right, so that's with regards to Bajaj Auto. Moving on, ICICI Prudential is in focus as well, and this is on the back of the GST concerns, wherein they've got a 492 crore GST demand notice, and it's not only ICICI, a few other companies also are seeing a similar trend. What does this mean for ICICI Prudential, and overall from a fundamental perspective as well? How are you looking at the counter?
Right. So, if you remember, the union budget had a provision, and that time we were many of the analysts were thinking that the provision which was came out in the budget would not impact the AP growth, but it has. And compared to the reduction of about 5 to 6%, it has turned out that it is about 10 to 11% reduction in the business. I'm talking about the Section 1010D of IT 1961, where they have kept the threshold of 5 lakh rupees for all these insurance companies. So that was a big blow for the earnings momentum of all these companies. On top of that, this uncertainty regarding the new taxation, GST demands, all these are clouding the picture for the insurance company. We are actually very bullish for the and constructive for the longer term prospect of the life insurance company. But we believe that these changes, which are tectonic, like the change in the income tax, the demand from GST, all these are clouding the picture at the outset for the insurance company. So, and valuations are also not that conducive. So again, here also we are expecting that stock can consolidate near this 530, 540 kind of levels, and we should wait for a couple of quarters before the actual earnings and growth can come in. So here also, overall, we are bullish on the long term prospects of the insurance companies, life insurance business. But ICICI Pru at this level doesn't seem so attractive. We compared to that, we like longer term SBI Life here. So our pick from the life insurance industry is on SBI Life.
Right, so that's a SBI Life pick coming in from the insurance space. Moving on, if you see in terms of FMCG majors, you have HUL, which is in focus as well. And clearly, in terms of HUL, there's a change of guard that has come in. We have Sanjeev Mehta as MD and CEO of HUL, who has stepped down. Now, clearly, I was just reading an interesting note which was indicating that, in the last 10 years, a CAGR of 10% in terms of TSR and 13% in EBITDA is what he has gone ahead and delivered as well. And the number of brands that have come in during his tenure has been spectacular. Now, from there, it's actually time to welcome in Rohit Java. And a couple of points that they mentioned about as well in terms of what the strengths are with regards to Rohit Java. How are you looking at a HUL from here on with the change in guard? Because there will be a lot of strategy shifts happening as well.
Right, as you pointed out, such organizations are professionally driven, and when there is such a big change at the helm, it is better to wait and watch. So, as you have pointed out, fantastic track record, and it is one of the well generators for many of the long-term investors. The FMCG as a sector is also considered a favorite amongst many fund managers because it gives stability and a lot of low volatility based returns. But at these prices, also again, since the change of guard is there, valuations are also not that cheap, and they have already run up. Plus, we have some concerns about the what will be the impact of lower and patchy rainfall that may happen because this year. So rural demand is not that given. And given all these circumstances, let us wait for a couple of quarters, see how new management delivers and whether they are able to take this huge brand juggernaut to a newer trajectory or not. Once we have the confirmation on that regard, then maybe we can start adding back to stocks like HUL. Right now, we think that it is better to reduce and focus on the high beta sectors like construction, real estate. That's where the opportunity lies for the next 3 to 6 months.
Right. Moving on from a similar space, you have a Sapphire Foods, which did see a block deal in today's session. How are you looking at a Sapphire Foods? Because if you see in terms of the stock price performance as well for this counter, in the last 1 month, the 6.5% returns, a pretty volatile ride as well. If you have to look at a YTD or a 6 months performance on the counter, what's your view?
So QSR is a fantastic theme for a longer term. I'm actually like insurance. We do like this theme for a longer term. Just to compare the numbers, we are at about 3 stores per million in the organized QSR. Uh, Compared to that, China is around 13 stores per million. China was in such a stage in 2003 to 2023, 2013 to 2023, I beg your pardon, they have clocked about 10% CAGR growth in QSR stores, and they have been able to bring it from 6 to 13. So that is the potential. We are just at 3 stores per million, and there is a huge potential. Global giants entered India and China in 90s at the same time with the scope that there is a massive store network potential. But right now, China has moved far ahead and India is still lagging behind. I think there is a room for all the brands put together about 100, stores per year can be added into Indian market. So we do like this space, the new lifestyle, the same store sales growth, all these factors, these metrics will trend higher eventually. And we think that the RM inflation, which they were facing, the margin pressure they were facing, they will move away. So as we move to higher per capita consumption, per capita income, and the consumption should boom. So this is a space to remain invested. But as again in the FMCG space, valuations are not that cheap here. At we have valued Sapphire and we came to optimistic target also comes to around 1,000 rupees per share, so which is clearly about 15-20% lower from here. So I think we will wait. These are the good spaces to enter. But as and when there is a correction in the market, when there is a mood is somber, and that's why value investors like us will get into these stocks at a lower level.
Right. So that's with regards to, the few of the names that we've discussed. But moving on, Devarsh, you mentioned about the construction and infra space, which you're positive on. Let's pick up one segment out of it from the real estate space, which is the housing finance space. How are you looking at the housing finance space, taking into consideration that now, everyone is eyeing a rate cut cycle as well, taking the pauses that we've seen, and that is something which will be beneficial as well. So, what's your view, and what would your top picks be from the housing finance space?
Right. So this is a secular trend. I think housing finance is poised to double from here in next 5 years. Right, FY28, this whole segment can easily double because we have improving affordability, the rise in urbanization, and the penetration of this company beyond tier one is happening. So within the housing finance, all players are likely to do well, but affordable housing space has emerged as one of the high growth, high ROI business. And given the superior economics here, we think that the this area may witness higher competitive intensity, but still players can continue to do well. In this space, we'll have to see how different market microstructures are likely to emerge and how different business models of collaborative type evolve. But we continue to like this space. In this space, obviously, the Canfin homes and the PNB housing, which are backed by the banks. They have the funding ease and they are likely to do well as money is their raw material. They will have plenty of them. Within the tier 2, tier 3 players, there are players like Home Finance, Aptus, and Awas. We think that in this segment, Awas is the best uh, durable franchisee. We have checked the franchisee. Our analysts have worked on it and find out the different they have calibrated and calculated what kind of business potential all these companies have, and based on the risk framework, the risk based pricing, targeted customer profile, liability, productivity of the employees, all these parameters, we have found that the Awas is the most durable franchisee. So we continue to like this space, and apart from the bank based housing finance company, bank funded, Awas looks interesting to us for the longer term. I think at every decline for a longer term, investors can accumulate this company for a decent returns.
That's with regards to where Awas Financial goes from the housing finance space. Thank you, Devar, so much for speaking to us at PQ Prime and sharing your views and topics that could be good investment opportunities as well. Thank you. Stay safe and speak to you soon again. So that's what we have in terms of trade talk. Few names that Devarsh has been mentioning could be good buying opportunities, but stocks like Bajaj Auto et al. Could be recommendations from a buy on dips strategy as well. Thank you. Stay safe. Lots more lined up on the other side. Please stay tuned to BQ Prime.